Welcome back to Fast Market, everyone. Kevin Hinks here along with Kevin Green. Now it's time for our cash tag segment. I'd like to bring in the co-founder of Likefolio.com, Mr. Andy Swan, to the show. He's going to talk about another one of our beaten up names. Andy, we're getting our portfolios ready for the second half of the year, so we're nibbling on some ugly names here. Starbucks is one of them. It's off its lows, but it's still significantly off where it was. And the fear, Andy, is this stock has stopped growing. Your thoughts?
Yeah, I think the fear that they've stopped growing comes from the fact that it seems like they've stopped innovating. And I think that's the big problem. They've tried to produce some new drinks, some new food items to really no avail. That putting olive oil in coffee apparently wasn't a big hit. And so I think this is a company that feels like they've run out of ideas. They're expanding by building more stores, which is always a positive. But each of those stores is doing less business because customers have a lot greater choice now. You look at the competition coming from Dutch Brothers, Scooters, Luckin Coffee. Starbucks is up against a whole new wave of competition and very competent competition. I know where I live in Louisville, we see these miniature coffee shops popping up pretty much next door to Starbucks, wherever they are. It seems like that's the strategy of these competitors, and it seems to be working. And so, overall, I think Starbucks, it's a really well-run company. It's easily the top name in coffee. It's got a big bullseye on its back, and the competition is coming in really strong. So, we think Starbucks being down at these levels is probably about the right price. I think long-term, this is a good company that knows how to execute and can find its way through headwinds. But the headwinds are very real, and I think investors need to know that for the next year or two. I think Starbucks could be somewhat dead money, but potentially a long-term, call it kind of dollar cost average you could get in over the next 8 quarters and probably be okay. But we don't see any reason right now, at least from a consumer engagement perspective, to be thinking that Starbucks is anywhere near through this turnaround story they're trying to pull off.
So, Andy, when you're kind of looking at this data here, what is really driving some of the optimism when you're looking at some of these other names like Dutch Bros? Because when you're looking at Starbucks, yes, they have a domestic presence, obviously, but it seems like they've also been lacking when it comes to their China growth, and that seems to be the thorn in the side for them. But what's Dutch Bros doing that Starbucks is not doing outside of maybe the innovation? Is it more marketing style? What's it looking like when it comes to the data that you're seeing in the market?
Yeah, it's interesting when Luckin came out and they said that their China strategy worked because they understood the Chinese market. And I think there's some indication that maybe Starbucks was a little bit arrogant, a little bit presumptive in the way that they moved into China, maybe didn't understand the market as well as they should have, and a competitor did. But I really think, what Starbucks has going for it is its name and all of its locations, its ability to expand. It's got a great balance sheet. But what they aren't doing right now, again, is just really getting the customer excited to come into the store. It used to be that when Starbucks came out with a new drink, everybody would rush to Starbucks and give it a shot. And today, I think a lot of that luster has faded, and people see it more as just a convenience play. The other problem for Starbucks, of course, is that labor costs are going up.
Sure.
Input costs are going up. It's really hard to keep customers happy when they're paying more and more every single time they drive through. I think customers are feeling that, and some of them are just moving to the ultimate competitor, which is just brewing it at home.
All right, Andy, let's have some fun with this segment. Howard Schultz just called me. He wants Andy Swan to be the next CEO of Starbucks. How would you get this company back into the competitive arena?
I think that what Starbucks could do is just go back to its roots of, building products that the customers want. I think they've lost touch a little bit with their customer base. I think they've become an efficiency machine. They've focused on opening new stores. But I think that the first thing that you've got to do is kind of get back to that roots, that startup roots that they once had and just say, all right, how can we wow the customer? How can we bring people into here? How can we make our marketing pop? We keep getting caught up in all of these, kind of political distractions when really the conversation should be about our products. And so that's first and foremost what Starbucks has to do is just reconnect with the customer and start delivering products that excite customers again. It's just been missing for the past 18 months, and there's no real signal that that's changing.
So, Andy, one more question that I have here for you, because I think you kind of highlighted it. Well, obviously, we talked about the innovation side with pricing power. I mean, the company has been able to increase their prices over the last couple of years here in order to compensate for the lack of volume, especially when it comes to the new store footprint. Do you think we might have hit a ceiling when it comes to their pricing power in this space where somebody can, brew a coffee at home for $1 rather than spending $8, $9 on a latte?
Yeah, no, I think that's a perfect point. It's exactly right. I think that ceiling is coming down. The ceiling of what customers are willing to accept and pay is coming down while input costs are going up. That puts Starbucks in a really tough spot. Like we've talked about on this show many times, people are moving from Target to Walmart. They're moving down brand, down price, and Starbucks is in the wrong spot for that type of activity. Because they are the top dog. And so I do think that the days of them just raising prices and raising that ticket price, total ticket value, those days are over, and they've really got to get more people in the door and excited to purchase their products.
Yeah, stay in your circle of competence is the secret for Starbucks, even though they can say they opened 364 new stores and their rewards members actually went up by 6% to 32.8 million. They've got everything they need to be successful. They just got to get that right and stay in the business that they're really good at. Andy Swan, thanks for coming on as always, spending some time with us and bringing us the Likefolio data on Starbucks. Have a great day, Andy.
Thank you. You too.
All right. Now, Kevin, when you look at a company like this, it's